The African growth story is now well known, on average 5% a year for a decade. But one of its top performers and most populous markets, rising up investor agendas, is also one of the most closed to foreign money, Ethiopia. With me to discuss the country is the man who, despite barriers to foreign entry, has arranged several multi-million-dollar deals, Zemedenah Negatu at Ernst & Young. Talk us through growth rates in Ethiopia, huge turnaround since the famine in 1984.
Right.
Some dissent over really how strong they are. What would you say? And I think you brought a chart to explain it.
Sure. As you'll see in the graph here, over the last 10 years, between 2012 to 2013, the Ethiopian GDP has grown by an average, according to the World Bank, 10.4%. It's been driven, obviously, by fundamentals from investments in infrastructure, transformation of the agricultural sector, and more now investments in industrialization. But the fact of the matter is, as you will see here as well, during that period, Ethiopia had been the fastest growing non-oil producing economy in Africa. In fact, the comparative numbers you will see here are much higher than the next one, which is probably Nigeria, which is at 7%.
And is it attracting sufficient foreign investment? So you tell me about who is coming in. I know
Sure.
you have brought in a lot of deals yourself,
Right.
even though there are some quite stringent restrictions on the sectors in which foreigners can invest.
Sure. Again, we have another graph here that shows you in 2008, the total FDI in Ethiopia was less than $100 million. I think it was around $75 million. Last year, it topped $1 billion. I was talking to some people last week. The year to date, the first 7 months of this year, they pulled in $1.2 billion. And probably by the end of the fiscal year, the estimate is it will be $1.5 billion. So the question you ask is, who's investing? It's a diversified portfolio of investors. Early days, it was the emerging markets, China, India, investors from the Middle East. But more and more, what we're seeing is Western investors. For example, the likes of Diageo, the likes of Heineken, which have put in close to $850 million in the last 3 years. So this is the end result of that growth, that 10.4% GDP growth has now attracted Western investors, which the early days was only attracting the likes of China. So this is a demonstration of the result of a lot of the growth that we've seen in the last 10 years.
And why are they coming? I know there are a lot of factories relocating,
Right.
the government's making a big push for it.
Right.
Electricity seems very cheap. You've brought another chart to show
Right.
that.
Right.
Is that the main appeal?
There are a number of things that is driving or attracting investors, especially in manufacturing. One is the very large pool of labor that's available. Not only is it large, but it's affordable. Let me give you an example. Today, in the coastal areas of China, manufacturing wages are around $600, $630. In Ethiopia, is about 20%, 30% of that. So the affordability of labor, China is becoming more expensive, so Chinese factories and others are moving to Ethiopia. The second part of it, as you know, to build factories, you need electricity. The Achilles heel of Africa actually has been the lack of power. In the case of Ethiopia, as you will show in this graph, is not only is it starting to become more and more available, but it's the cheapest electricity per kilowatt hour of any country on earth. It's 5 cents. By comparison, you'll see the next door in Kenya, it's 3 times what it costs in Ethiopia. Again, so investors are taking it. The infrastructural investments, the transport logistics, having the largest airline based in Ethiopia, which is Ethiopian Airlines, which last year made more money than all African airlines combined. These are starting to attract investors.
And what about these restricted sectors? How
Right.
tough is it to find a space?
I think restricted is a misnomer because in my view, and you see the law, only 2 or 3 sectors are actually off limits to foreigners, which is financial services, which creates a lot of noise, let's put it, when we do a lot of these global roadshows. The first question people ask is, when are you going to open up the financial service sector? And the second one is telecom. So these are the 2 major ones that Ethiopia as a country, the government has decided that it's not the right time to open up. Other than this, everything, especially manufacturing, especially agriculture, all the other investments in Africa, in infrastructure, all these sectors are actually open for investors. So the best way to describe Ethiopia is not that it's closed off its economy. No, a couple of sectors are off limits, but the rest is wide open. That's why you see the investors that are coming to Ethiopia, are, whether it's Unilever or Diageo, or the Chinese shoe manufacturer, Huajian, which broke ground to build an entire industrial city that employs anywhere between 30 and 50,000 employees to produce leather goods, shoes for the American market.
And are there actually enough people to spend money in the country? I know you have 90 million, 94 million people, but do they have enough in their pockets to sustain some of these investments?
Very good point. I mean, all this effort then has to lead up to something. So we have another graph that shows here the purchasing power, the per capita GDP of Ethiopians, and we've done an analysis. Today it's about $1,300 on a PPP basis. Our forecasts show that if the current growth trends continue by 2025, which is the magic date for the country because that's when they intend to achieve middle income country, it will triple to almost $3,000. So on top of that, the 90-some million that we have as a population, 94 million, we're expecting it to go to 120 million by 2025. So tripling of per capita GDP with a very sizable increase in the population gives you a picture. If you're in the consumer products companies, if you are into volume businesses or anything, you have to be in Ethiopia because this is one of the very few large untapped markets left in Africa.
Well, Zem, thanks so much for coming. So a manufacturing hub in the making with deals in everything from beer to shoes and, by the sounds of it, more to come.